Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your boys, Bert, the Hurt, Lanny, the Dividend Diplomats, guys, on the way to 20,000 subscribers. So help us get there. But today we're going to talk about a stock that tore the cover off the ball. Yes, first baseball reference of 2024. And they are on absolute tear. And no, they are not a fintech company. They are not involved in artificial intelligence here, guys. But they had an awesome Q1, and that stock price has been on fire.
Smash that subscribe button. Give this video a thumbs up. Let's go. Let's all reach financial freedom by buying assets that pay you money without lifting a finger. On a side note, it is impressive that baseball is what 3 weeks in now, and we haven't made a reference until today. It's kind of sad, actually. That probably tells you the state of the affairs of baseball more than anything.
Yeah, again, it's not like how it still isn't like how it was. And even some coworkers again, sidebar conversation here, like, oh yeah, my kids don't even know how like what baseball is. And it's like, when we were growing up in the
Yeah.
90s, it's like, man, there wasn't a day between
No.
probably beginning of May to the end of September that I wasn't outside playing at least backyard baseball.
Oh, for sure. Yeah, every day we were out front pitching, hitting, just doing whatever we need to, imitating all the pitchers. That just doesn't happen anymore. It's really sad. Like I used to be the biggest baseball fan, and now it's just non-existent. Like it's
Yeah,
terrible.
I maybe there needs to be because I mean we had Griffey, we had Bonds, we had obviously the McGuire, the
Yeah.
Sosa era,
Yeah,
Bell.
you need your big star not getting involved in potential gambling scandals is probably what baseball needs more than anything.
Yeah, yeah, yeah. Mario Tommy.
Yes.
Um,
All right. Sidebar end. We can talk baseball much more. Anyone wants to find us on X. We'll talk baseball all day. But let's talk
This
about a
is a
dividend
it's a
stock.
great segue into the stock that we're going to talk about today, guys. Just one stock, a stock that Bert doesn't own, a stock that I don't own, but we have talked. Do you own it, Bert?
I do not. Laney, there
Okay.
is an actual great segue into this. There's a fantastic segue into this one.
Who is the premier provider for the
No,
MLB?
no, it's not. No, that's not what it is. I'll give you one more guess. See if you can remember it. I'm just confirm fact checking this.
I have no idea what the hell you're talking about.
Major League. That was the commercial in Major League. This was
Oh, is it the card?
yeah, this is the card in the commercial for Major League.
They
Uh,
tried to do the commercial.
yeah, that's our baseball tie into this. All right, everybody, it came full circle here. What company are we talking about today,
Well, we're
Lanny?
talking about a credit card processing company, not Visa, not MasterCard, but American Express, ticker symbol AXP, guys. And we really wanted to feature them because they released earnings. Again, by the time you're watching this, we're filming this the night of April 20th on Saturday night. By the time you watch this, again, it'll be about a week post their earnings release. And man, the stock is up 23% year to date. I think they were up between 3 to 7% the date of their earnings release.
Loved
Um,
it.
they, they're up 41% since this time last year. So they're like, NVIDIA, watch out. Everybody else hold my beer. We're here, is what American Express is saying. And, based on their earnings release, Bert, I know you want to hit them with a few of these high level items here.
Yeah, it was terrible. Revenue is only up 11% to 15.8 billion. Earnings per share only increased 39% to 333. The best doesn't stop there. Their share count's down. They're buying back stock. They bought back at least 3% of the company's stock, helping bolster up that share price, helping bolster up that earnings per share, and dropping down that oh so sweet dividend payout ratio.
Exactly, guys. And then earlier this year, they did announce an increase from 60 cents to 70 cents already. So that's a very balmy dividend growth right there, guys. Keep this in perspective. I own Visa in my stock portfolio. And Bert, I don't think you ever pulled a trigger on a credit card or a card processor.
Discover. My wife has Discover.
DFS, that's right, getting ready for that big merger with Capital One.
Yeah,
Um,
but that's also a reason to be optimistic about credit card companies. So obviously American Express is earning. And we were talking about this. We'll come back to the point you and I were talking about here in a second. Capital One just acquired one of the big four credit companies or announced the acquisition hasn't closed yet with Discover. So credit card company A, Capital One, is acquiring credit card company B here, Discover, to become a major player. What does that tell you? The credit card sector is just on fire right now.
Credit card sector is on fire. When you have hotter than expected inflation and consumers just keep swiping, they keep
Sucks.
spending money. There's a lot of interchange to be made by the card processors, and Amex holds the liability, holds the loan. I think back at I have a Hilton Amex card, and Bert, I think you still rock one as well.
I do too.
Um,
Yeah.
and you know damn well that, hey, if consumers are spending, they're holding it, they're gaining interest income, these, American Express, and they are earning that sweet, sweet interchange revenue, guys.
Yeah.
And yeah, it should be very good signs for Visa, MasterCard, Discover, and other card processors out there.
Yeah. And that's why it's reflected in the earnings release that American Express just did so well. So now, after obviously strong earnings, the stock price has popped up. They're up 22%. Let's see how they're doing in our stock screener. We'll run them through the metrics here. Price to earnings ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that bonus metric, the dividend yield. Let's kick this one off, Chico.
Oh boy. According to Yahoo, Amex is expecting $12.06 in earnings per share. Hey, they already earned 333 from the first quarter, guys, so they're well on their way to achieve that target. A PE, you would think it would be higher, but it's still only 19 times after popping up over 20%
Ooh.
this year.
Yeah, that's wild. Let's look at that payout ratio. Annual dividend is $2.80. Divide that by the 1206 forward earnings from Yahoo Finance. That gives you a payout ratio of 23.22%. So way below our 60% threshold.
Way below, guys. And then get into the sweet, sweet dividend growth, guys. And as I mentioned, the last increase went from 60 to 70. Somebody can fact check me there, and that was a 16% increase, well above their 5 year average of 10.64%. They've been increasing dividends for only 3+ years. And that's because during COVID, they kept the dividend payment the same for, I think, 8 quarters.
Yeah, so the one thing is their price, as we said, is up nearly 23% so far in 2024. So obviously the dividend yield is going to drop. The yield is now 1.21%. Interestingly, it's now below their 5 year average of 1.29%. Not significantly far below, but what that tells you is the stock isn't quite as undervalued as some of the other companies. Because if it were, the yield would be higher than their 5 year average.
No, yeah, exactly. I mean, again, that's what you would expect when that stock price appreciates so much,
Yeah.
guys. But we're looking at it again. Is this a stock to buy right now? Does this stock have metrics that could be great for your stock portfolio? Could there still be a lot of growth ahead, both on the appreciation performance side as well as dividend growth? I will say dividend growth should continue to grow at a
Yeah.
very fast and hard pace, with the low payout ratio and just with them knocking the cover off the ball again.
Yeah, if you're going to have a low dividend yield, you better have strong dividend growth, and American Express absolutely delivers with that.
Yeah, absolutely, guys. So, Bert, what's your quick take on Amex? I mean, are you watching? Are you buying? Or are you just, hey, that's there?
I'm always watching American Express, truth be told. I'm always watching the credit card sectors, but am I buying? No, it's not undervalued yet. The chance to probably buy this was last year, but that doesn't mean you still can't jump on the train. It's just for me right now, it's a little rich for my blood. What are you thinking?
I own Visa, so I'm riding that one out.
Yeah.
We own Discover in my wife's portfolio as well, so we do have two over the handful of companies, like you said, that are out there. I'm watching this ride. I mean, again, if it somehow comes back to gravity, if somehow we go through some true recession where consumer spending stops and things come to a halt, yeah, I'll look back at them. But right now it's a great sign for other industries for what could be happening. Again, insert Visa, MasterCard, Discover.
Yeah, so let us know what you guys think of American Express. Are you buying AXP, any of the credit card companies? Let us know in that comment section down there below.
Yeah, if you guys haven't, make sure to subscribe to this channel. Like the hell out of this video because we're all trying to get to financial freedom together. by buying dividend stocks, by buying these assets that produce a nice form of passive income, guys. And just remember, you're either with us or you're against us, Jack. That was Bert, the Hurt, and Lanny from the DD, over and out.